What's good, ladies and gentlemen? So welcome to another Mala Mala Ma / SK Wealth Academy video. Before I get started, please do hit the subscribe button. Also, after you hit the subscribe button, you must hit the notification bell if you want to be notified of when I upload new content, because a lot of the content I will upload is going to be of a time-sensitive nature, so it's best watched and listened to immediately after I upload it. So let's get started. So today's video is titled "The Real Reason the U.S. Central Bank Cannot Raise Interest Rates," because as we see, the ceiling already seems to be 2.25% to 2.5%, and it seems like the whole bubble of everything is going to implode if they raise it any higher. So since that point, they've been cutting interest rates. But here's the real reason why the U.S. Central Bank cannot raise interest rates, and it can be traced back to, I'm counting on my hands, 8 simple words. Their response to the 2008 global financial crisis. So U.S. central bankers reached a crossroad of responsibility versus socialism for the uber rich years before actually even the 2008 financial crisis manifested, and they chose socialism for the uber wealthy. Surprise, surprise, as that could be expected, because central bankers, although they're independent, privately owned banks by private families that do what's only in their best interest to the detriment of all the interests of the citizens and the nations in which they operate, they still somewhat have to appease the very highest echelons of global wealth. If they don't want this class that also has a lot of power, although bankers are at number one, and then there's heads of state like presidents and prime ministers, and then congressmen and members of parliament are below that. I mean, bankers are at the very highest peak of that financial pyramid of wealth and power, that they still do have to appease the highest echelons of global wealth if they don't want that class to turn against them and use their resources against them to try to shut them down and to eventually call for the dissolution of central banks, which should happen. They have to appease this class. So again, it's no surprise when they continually and repeatedly appease that class. But when central bankers both in US and in Europe deliberately and very consciously chose the path of catering to the few thousands that constitute the class of the uber wealthy over helping the remaining 6.8 billion citizens of planet Earth, which that was the global population back in 2008, they sealed the fate for what their decisions have to be some 10 years later, which of course is present day in 2019. So during 2008, all of the largest European banks and US banks were completely bankrupt. And to this day, I know we can still argue about that, because unless you're privy to the data, we can't say that for 100% certain, although I'm 99.8% certain that that claim is true. But even though that claim still remains disputed because nobody really knew the true financial devastation that the world's biggest banks suffered back then, there are enough circumstantial evidence, we're talking like O.J. Simpson level circumstantial evidence, to really make that claim. Because for example, finance ministers that have privy to that data that was never released to the public, like Greece's Yanis Varoufakis, he made such claims that all the largest banks of the European Union were basically bankrupt at that time. And then any reasonable person that really deeply looked into what was going on in response to that 2008 crisis that started with the collapse of Lehman Brothers, Merrill Lynch, and what was the other one? Bear Stearns. If you looked at the steps that were taken, it was to protect the perception that these global banks were still going to be okay when they were not okay. For example, there was a complete suspension by all the regulatory agencies in the EU and in the Americas of requiring banks to actually mark their assets to market value. So they were allowed to use fantasy valuation, internal valuation models to price all their assets. So they could price their assets like multiples above the actual what they would actually command in the open market, which is ridiculous, because then you could claim you never have a loss. Of course, they still claim losses, because anyone that followed that sector in 2009, 2010, you basically saw that they were still declaring massive losses, but those losses would have been, if we look just from the net worth of these banks, because the amount of their liabilities exceeded the amount of assets. If you're looking at it from a forensic accounting perspective, which you have to do. You can't look at it like the numbers they basically release in their pro forma statements, which is ridiculous. It's not even close to reality. So you would see that a lot of those banks were still bankrupt right after the 2008 financial crisis. So, the problem was that if we looked at what happened and what triggered the 2008 global financial crisis, we really dug deep in below the surface. In other words, we didn't really just accept blindly and obediently and very passively whatever the financial mainstream media was telling us, which was all a bunch of rubbish. Then we would have understood that their unwillingness to operate as a bank, which sounds ludicrous, right? Because that's what they are, but it was really their transformation decades prior into becoming and operating like massive hedge funds, in which they risked all their clients' deposits in hopes of making billions of dollars every year in profits for themselves. And they were not operating like a bank should operate and safekeeping your deposits, but they were basically operating more like a hedge fund. And we would have realized that, if they did not do that, then regulatory agencies would have no need to suspend reality to tell these banks, use your own internal valuation models to value your assets at whatever price you want them to in order to show financial robustness to the public, so they don't worry about you going belly up, even though you're this close to going belly up, or maybe already were underwater as far as their liabilities exceeding the number of assets they had. So secondly, anyone that looked into the original bank recapitalization number of $700 million and free money taken from the taxpayers to the banks, again, socialism for the uber wealthy, because when small businesses and mid-sized businesses and middle-class entrepreneurs struggled during this time, they got no bailout, right, from the bankers. It's only bailout for the uber rich. So both, and if you look at that number, $700 million of free money to the banks, given both to American and European banks, and you would have noted what a U.S. Treasury spokesperson stated back then when asked about how that figure was determined, that figure of recapitalization. And that spokesperson said, quote, "It's not based on any particular data point. We just wanted to choose a really large number," end quote. So that's a statement that revealed that even back then, the U.S. Treasury, at the time of the Lehman Brothers, Bear Stearns, Merrill Lynch collapses, really had no idea how deep the rot in the banking industry had penetrated. And by the way, later official U.S. government documents noted in 2011, just 3 years later, I think that whole initial $700 million figure was a scam to begin with, because they noted just 3 years later, the central banks had given away trillions of dollars, literally over $1 trillion to multiple banks. And so just to recapitalize them. So it would be ludicrous to argue that these banks took trillions of dollars of free money for no purpose whatsoever. And that was only by 2011 when they hadn't recovered. So no one really knows how many trillions of dollars the central bankers gave to all these banks. And so the real reason that the U.S. central bankers gave them trillions was to keep them from going bankrupt. So there are two reasons today why U.S. central bankers can still even trigger the endless, what I see as comical debates that consume mainstream financial media in 2019 that tries to predict their future behavior, tries to interpret and analyze what their public release statements mean, what their interest rate decisions mean. Because if you understood the very opening comments from this video, then you would know there simply is no future to predict, because the future behavior has been set in stone no matter what these bankers say publicly. So the future behavior in years 2020s, 2019, right, even next year in 2020 and beyond, was already set in stone years before 2008 by their actions. They took actions which back then they were at the crossroads, right? You either act responsibly, do what's best for citizens, or you just serve it's not even 1%, it's less than 1%. They serve the uber wealthy, the highest echelons of wealth in the entire world. They chose to serve the highest echelons of wealth in this world, and there's no turning back now. the turning back point would have been in 2008, and they chose not to do the responsible thing. So they've already crossed that point of no return back then, and not now. I'm not talking they're crossing the point of no return now. I'm saying back then they chose to cross the point of no return. So the endless articles about US and EU central bankers, quote, losing what little credibility they have left, end quote, or arguing whether former Goldman Sachs lackey and current ECB President Mario Draghi or U.S. Central Bank Chairman Jerome Powell are liars or idiots. I've seen those kind of comments. Is Jerome Powell a liar or an idiot for that decision? Is Mario Draghi a liar or an idiot? The reason to me that those kind of articles are comical in the nature of their speculation is because the fact the only reason those articles are written is because of the forwarded mainstream narrative and belief antithetical to reality still exists, that central bankers are trying to help us. They're trying to enact policies to help the economies of nations in which they operate. We only need to look, say, at Mario Draghi's record. Look at his record when he was governor of the Bank of Italy from 2005 to 2011. What were overall the weakest financially weakest banks during the 2008 global financial crisis? They're all banks in Italy, right? And so they were the financially most insolvent banks on the verge of going under. And that's all we need to see to understand what Draghi's purpose is as the president of the European Central Bank. And furthermore, during this time, there are also always leaks in the central banker cartel efforts to suppress the price of gold, in which they will publicly state, hey, the Bank of Italy is considering as a policy maneuver to sell down its gold reserves to pay back a portion of their increasing national debt. After which, when they publicly made these announcements and they ran around the world on wires from Bloomberg and Reuters and all the other complicit partners in their schemes, the prices of gold would always plunge immediately afterwards, and of course after which the Bank of Italy would never sell any gold. They would just say, haha, we got you. And so it would not surprise me at all if Mario Draghi was the person responsible for those manufactured and disseminated lies. And I remember that happened like at least twice, maybe even 3 times. It happened definitely more than once when it was announced. Every time gold prices started rising and the banking cartel needed to slam gold prices down, they say, hey, the Bank of Italy is going to sell down gold, and people get nervous, sell off their gold, and the Bank of Italy would never sell their gold. So, and let me just talk about one last point. I want to also say, if one realizes that the US dollar, despite continuing propaganda from the mainstream media that the US dollar is strong today, if one only looks at the massive decline in the purchasing power value, right? In the purchasing power strength of the US dollar since the inception of the US Central Bank in 1913, realize that it's lost over 98.5% of its purchasing power. It's quite basic. You could really teach a 6 or 7 year old child, just look at the trajectory of the purchasing power of the US dollar since US Central Bank inception. It looks like this, right? And you could tell a 6 or 7 year old child and say, hey, how much purchasing power has it lost? Over 98.5%. What is that child going to conclude? That the central bankers are trying to help you or hurt you? Even a 6 or 7 year old child can get this, but yet we can't as adults, which is ludicrous to me. It's quite basic to understand. Their end goal is to destroy the US dollar completely. So consequently, the fact that they are successfully carrying out their mission gives them credibility, in my mind, in my opinion. It doesn't make them lose credibility because they're accomplishing their exact goal that they set out to accomplish. And once we understand their goals with clarity and their purpose with clarity, then we can understand their behaviors. We can understand not to believe anything they say that opposes their mission. So likewise, there would be no debate as to whether any central banker, governor, member of the board of any central bank, chairman or president was a quote unquote idiot or a liar if they state anything that publicly opposes their real mission. And it would be obvious anytime that they lied that they were lying. We would have to say, are they just really that dumb or are they lying? So consequently, again, even though there should be no debate about the intent of central bankers' actions and public statements, there are really 2 reasons that when I really think about it, I believe there are two reasons why their actions and press releases always trigger such enormous debate regarding their meaning. Number one, central bankers control the sphere of academia. So anyone that learns anything about money and banking in traditional forums of academic classrooms and relies on this knowledge to interpret central banker actions and statements, they do so through a very distorted lens that will never grant them clarity. So that's number one. And secondly, central bankers are the gatekeepers, much like music producers like Detail, film producers like Harvey Weinstein. Is it Weinstein or Weinstein? I don't know, but you guys know who he is, right? Based head of the Miramax Studios, I think, and big time Hollywood producer who basically served as a gatekeeper, tried to sleep with young, gorgeous actresses and with promises of becoming famous and becoming a famous actress and very wealthy. Same with a lot of music people in LA. I mean, I heard rumors of such for years when I lived in Los Angeles. So they're the gatekeepers, much as they're the gatekeepers of the music and film industries. The central bankers are the gatekeepers of the banking world. And despite reprehensible gatekeeper behavior, like I said, that everybody knew who lived in LA, who wasn't even in the industry. I wasn't in the industry, and I heard those rumors for years that Harvey Weinstein was a sleazebag, that certain music producers were sleazebags, and they're still able to convince people at the highest echelons of their industry, who are very aware of their reprehensible behavior, to shamelessly and publicly fawn over them. So I'll put some links in the video below if you're watching this on YouTube. You want to go check that out. And you'll see how protected these gatekeepers are just because of their power, that people sell their souls every day to really bow down to that power, because they know that people in those positions have the power to make their careers, make them wealthy and whatnot. So academics do not rise through the ranks of Princeton, Harvard, and various departments of the U.S. Treasury without gatekeeper approval, without central banker approval. And thus, they become the talking heads that constantly appear on mainstream financial TV shows and talk shows that have been branded with the highest level of loyalty to central banker narratives. And that's why we don't hear anything different at that level. So the level of brainwashing about central banks and their purpose has been so widespread and integrated into society at such high levels that a former central banker like Alan Blinder can state more than a quarter of a century ago, I think he said this in 1974, he said the last duty of or 1994. I'll find the date. Hold on, but let me read this quote. He said, quote, "The last duty of a central banker is to tell the public the truth," end quote. So he openly warned us that central bankers will lie as their standard modus operandus when publicly speaking about monetary policy. Yet we still have talking heads on television regularly debate, hey, what's the meaning of that central banker's words? What's the meaning of that central banker interest rate policy decision? So the level of brainwashing is so deep. Okay, I found it. That he made his statement, infamous statement, in 1994. So it was, that's more than a quarter of a century ago. And like fools, we still argue over whether we're receiving the truth about central banker plans every time they issue a statement. So in fact, as a testament to our level of brainwashing, current Secretary of State Mike Pompeo admitted earlier in 2019, he said, quote, "I was a CIA director. We lied, we cheated, we stole." Like, we had entire training courses on how to do this, end quote. Like he said, we had entire training courses. I just want you to know that was the end of the quote, and I added on how to do this just to clarify. But that was a direct quote from him. And this is the type of men that heads of state gladly appoint to some of the most critical positions in their cabinets and refer to as fantastic men. And when I was a teenager, the CIA would still lie, cheat, and steal, but in the process of doing so, tell us they were giving us facts and truth, acting honorably, and gifting us with benefits to improve our lives. They would never come out and say, hey, we lied, we stole, we cheated. But today, I believe men like Pompeo have no fear of any type of retribution for openly admitting such questionable behavior because of the fact that they know how deep the rotten society has become, given their brainwashing imperatives that they have executed over the last several decades. And he knows that that process of brainwashing is so complete by 2019 that the majority of people will not even blink an eye when hearing that statement. Now, the last thing I want to cover is just the whole thing of the interest rates and why it's so ludicrous that the Fed funds rate in the United States cannot be even raised above 2.25% to 2.5% without possibly bursting the most distorted price asset bubble in history, which I call the bubble of everything, because we have a bubble of everything. Like all around the world, we have a bubble in stock, not only in stocks, because people, of course, will look into the U.S. stock market as the biggest bubble stock market of all. But we have bubble in bonds, we have bubble in real estate, and some of those are beginning to fade. Like in Australia, a lot of the real estate is fading now. But when we look at history, remember, if we just look at history, we can learn a lot. That U.S. President Nixon in 1973 ended Bretton Woods by removing gold backing of the dollar. Now, he did not remove the gold standard or end the gold standard, which you will find hundreds of articles on the internet saying that President Nixon ended the gold standard in 1973. Completely false statement. That was not a gold standard. It was Bretton Woods, and it was gold backing the U.S. dollar, which is there are very, very significant differences between what Bretton Woods was and the gold standard, which I explain totally in my SK Wealth Academy, which I'm going to release. So if you want to understand the differences, you can just come take my courses. But back then, the reason that a lot of people don't know, or the age of the dollar was ushered in by the end of the gold backing of the dollar. People don't know, right, that the dollar almost died back then because people didn't trust the US dollar anymore without any gold backing. They're like, hey, what's backing it? There's nothing backing it anymore. And today we don't even think about these things. We don't think about the fact there's nothing backing really besides the threat of military strikes and war. I know, which is a significant thing, but I mean, there's nothing of tangible value that backs the dollar, the euro, the yen, the yuan, the Canadian dollar, Australian dollar. And I know we can say that military strength is a tangible thing, but I mean it should not be fear and intimidation that gives money value. I mean there should be something tangibly attached to that note. Like you can't exchange a note for a war, right? But there should be something. Hey, this note is exchangeable for 1/20th an ounce of gold. There should be something tangible. So to save the U.S. dollar from dying back then U.S. Treasury Secretary Paul Volcker consistently set Fed fund interest rates at 6%, 7%, even as high as 13% in 1974. But wait for it, that wasn't even the apex. It went to a high of 20% by mid-1981, which meant that the prime interest rates, like the best interest rates offered to the best retail customers of banks, were like at 23%. Because there's always a margin. Of course, commercial banks will charge over the Fed funds interest rate. And so today the Feds or the U.S. central bankers can't even raise interest rates above 2.25% to 2.5% without risking U.S. stock market crash, which should show you that the delusion of current U.S. President Trump's statement that it is the greatest economy ever. He will say it's the greatest economy ever, and it just shows you how delusional that statement is, because the whole situation of the Fed funds interest rate, you can see that the economy is extremely precarious, and that once you draw back the curtains, like in The Wizard of Oz, you're going to see there's not anything fundamental supporting the U.S. stock market. So this basically demonstrates also the massive level of price distortion in all asset classes, and the fact that U.S. central bankers slashed interest rates by 25 basis points this past July 31st, and the U.S. dollar soared on this news against other currencies. It just shows you how weak other currencies are, and also how AI, algorithmic trading, controls everything today. Because when things don't make sense, that means the artificial intelligence trading algorithms are kicking in, which we obviously did not have 3 decades ago. So in the mid 70s to early 80s, central bankers had to pump interest rates beyond 20%, and that action was necessary to strengthen the dollar and to keep the dollar, in its ranking of supremacy in the global currency market. So how can the US dollar be strengthened by slashing interest rates today? Did something change in monetary theory that I'm not aware of? Or has perception that controls market behavior changed? Have central bankers only become better at controlling perception while they can still basically destroy reality? So the dollar becoming stronger, even if it's not absolute strength, in the sense that purchasing power is still declining every year when its relative strength against other major global fiat currencies is on the rise, is it's basically the same as if the law of two objects cannot occupy the same space at the same time was suspended in the realm of physics. So the fact that you have the US dollar strengthening, even if it's relative strength against other global fiat currencies, when the US central bank decides to slash interest rates, that would be like if today we could observe two objects occupying the same space at the same time. That's how distorted global financial markets have become in today's world. So lastly, I just want to end up with please asking for some of your assistance in launching my new Mala Mala Ma YouTube channel. Please subscribe below and hit that notification bell, remember, as well, if you have not already done so. Because if you made it to the end, I assume that you found some of this content interesting and you will want to know when I release future content. Number two, please go to my website and also subscribe to my free newsletter called and you can go to my website, which I'll put the link below, malamala.com. You can find how to subscribe to my newsletter there. Please do subscribe and you'll get more of this content in the form of a newsletter on a weekly basis. And lastly, thank you so much to my patrons for supporting me, because patrons make videos like this possible. If you want to receive more, please consider becoming a patron, because it's totally fun and I get no ad revenues from anything. So go to visit patreon.com/skwealthacademy. You can also discover what Patreon benefits there are that only my patrons receive. So thanks so much for watching. Always remain intensely curious, and until next time, bless up.